Good evening, people. It's Craig and welcome back. Tonight we're going to talk about crypto miners. For those that don't really want to get into cryptocurrencies or they want to put stocks in their, let's say, retirement investment account, you can't put cryptocurrencies in there. You can only put stocks. So I'm giving you some options. If you think cryptocurrencies do have a bright future, then you're going to want to get into miners because they're a leveraged play on crypto. So just like a gold miner, if gold goes up from $1,700 to $1,800 as a percentage of gold, it's not really a big, huge deal. But if you think of the gold miner who has a pretty much fixed cost to mine, that extra $100 goes right to the bottom line, which makes them that much more profitable. So you see why there's that leveraged effect with miners. And the same with crypto. If a crypto miner is costing $8,000 to mine a coin and the coin's only selling for $25,000, they're making a good profit, right? But then when it goes to $55,000 like it is right now, or $64,000 like it was less than a week ago, all that goes to the bottom line. So this is definitely the best way to get a leverage play on crypto without actually going through the hassle of trying to get your money onto a crypto exchange to buy crypto. So there we go. Hopefully you're looking forward to this. Before I get started, I usually put that whole blurb about subscribe, thumbs up, yeah, at the end of my video. But let's be honest, the analytics don't lie. Most people don't always make it to the very end of the video. So I'm going to say it now. For one particular reason, my first channel, and some of these viewers that are on here now probably know me from my other channel, it's called Cruising Off Duty, where I've sailed across the Atlantic a couple of times, leaving from South Africa, my most recent time, to St. Helena Island in the middle of the South Atlantic, then across to Brazil, then up the coast to the Caribbean. And I documented the whole thing. If that's something you're interested in and you didn't know I had that other channel, go over to cruisingoffduty.com, or, well, that's my website, cruisingoffduty.com, or go to YouTube/cruisingoffduty and you'll find it there. But the reason I bring that up is because I remember from that first channel that there was kind of this like slow progress where you're like growing and you're happy you're growing like I am, but you find you're growing like 10 subscribers a day or whatever. And then when you get to 1,000 subscribers, I noticed I jumped quick. And the same thing's happening on this brand new channel. And the reason is YouTube won't monetize a video unless you have at least 1,000 subscribers and 1,000 hours of views. 1,000 hours of views is really not going to be that hard, but we need to get us up to the 1,000 subscribers because I did a little test today. I searched for the topic I just made a video on a friend's YouTube account who hadn't subscribed to me yet, and my video didn't show up anywhere on the first page, like it's down. And it makes perfect sense. YouTube's not going to promote a video that they can't put ads on because they make no money. So they will always promote a channel that's above the 1,000 subscribers. So if you could do anything for me, do me the solid, subscribe if you haven't already. And hey, if you got grandma in the room and she wants to subscribe, even if she may not ever watch these videos, it would help me out to get to above 1,000 to get YouTube to actually start promoting these videos to other people. So thought I'd say that at the beginning of the video because I know a lot of people don't stick around to the end to hear the whole subscribe speech. All right, so we want to talk about crypto miners. And I think right now is a fabulous time to get into them because if you've been watching the stock market, all of those high PE growth stocks, the Teslas, the AMC and GME, GameStop and AMC, and anything else that had a lot of hype behind it, Palantir, I could go on and on. All those ones that were high flyers, all the ARK Invest ETF was jumping into, are all getting pounded. You know, anything that was a SPAC is getting pounded. Anything with a high PE is getting pounded. It seems like everybody's going back to those blue chip growth companies like Amazon, Apple, whatnot, and those more speculative growth companies are just getting the snot kicked out of them. And I have to say the same thing has happened to the crypto miners. You're going to find that even though, let's throw up this screen here, even though this is the graph of Bitcoin, you can see this is the little blurb at the end that everybody's crying about how Bitcoin has just gotten decimated recently. And when you really think about where cryptos or Bitcoins come from in the last little while, it's barely a blip, right? It's funny because when you zoom in, you see, oh God, it sounds like it's Armageddon. We went from 64,000 down to 54,000. We're dying. But when you really look at the big picture, it's expected, right? It's expected. But I want you to keep this in mind because even though Bitcoin has barely fallen back, when we look at the cryptocurrency miners, you're going to see that those stock prices have actually gotten savaged. So this might be that perfect time to get in. You want to buy on a pullback, and we've had a pullback. So let's get started. I'm going to go through 4 cryptocurrency miners. We're going to go through Hive, Hut8, Marathon, and Riot. So let's go through that right now. I made a nice little PowerPoint for you. Okay, so we're going to do the crypto miners. I've picked these 4 as the top 4. It might be subjective, but anyways, these top 4 we're going to go through, and then I'm going to rank them from 1 to 4. So the best crypto miners. Why crypto miners? Well, I've sort of touched on this already. They're a leverage play on the coins. So if the coins go up, these will go up more. Of course, the opposite also happens too. As we've seen, a little bit of pullback in Bitcoin creates a huge pullback in these stocks. So yeah, you wouldn't want to invest in these if you think we're about to go into a savage bear market in cryptocurrency, because then these will probably get savaged even worse. The revenues have gone up more than 200% since the 2020 halving of Bitcoin. Bitcoin being the granddaddy, the OG of the cryptocurrencies. They have a halving every 4 years, which means you have to work twice as hard. The miners have to put out twice as many petahash in order to earn the same amount of cryptocurrencies as they did before the halving. And you can own them in your registered retirement plan. So this is unlike cryptocurrency, which at present you can't put cryptocurrency in your RRSP, or for Americans, your IRA. So this gives you that option to do that. So first we're going to talk about the Hive Blockchain. That's the ticker. Something to keep in notice is that little V there. So that's a Toronto Stock Exchange Venture Exchange, which is sort of like the OTC market in the States. It's kind of like the baby stocks are there. They haven't quite gone to the big leagues yet, but Hive is planning to change that in the not too distant future. Next is Hut8 Mining, and these are just in alphabetical order, by the way. Hut8 Mining, it's on the normal Toronto Stock Exchange. Its symbol is HUT. Then we have 2 American ones. Marathon Digital is on the NASDAQ, that's symbol MARA, and Riot Blockchain, which has a symbol of Riot, also on the NASDAQ. So we're going to start with Hive, again in alphabetical order. So on the top, you're going to see all of the kind of like the standard industry criteria. The profitability keys are the hash rate, how much computer power they're putting into it, the power consumption, how efficient their bit miners are or their ASIC miners are. Coin price, of course, that's their revenue. So if the coin price falls, then their revenue falls. Their cost per kilowatt hour, that's company by company dependent. Some have better contracts with electric producers, some are less good, and maintenance costs. Now, one thing you want to mention here, the industry average, the cost to mine 1 Bitcoin in 2020 was $8,206, and the average company got 4 cents per kilowatt hour, and they were working with a 71 watt per terahash efficiency, and that's running a S9 mining rig with custom firmware. All that's going to stay at the top of the screen for all of them, so you can just refer back to it. But yeah, the market cap of Hive is $1.485 billion. They operate in Canada, Sweden, and Iceland. So it's one of the few companies that's diversified to multiple countries. All the other ones, I think they're always in one country or another. The reason they stuck to these 3 countries is because A, they have usually got ample hydroelectric power or wind power or whatnot, and they're also in cold countries. I am personally living in Canada, so I can tell you wintertime here is very, very cold. And why would that matter? Well, if you were to do this in Arizona or somewhere hot, you would spend so much power just keeping the building that you've got these rigs in air conditioned, because they give off so much heat. When you see the photos of these racks and racks of ASIC miners, they give off so much heat. In fact, I hear they're so loud in there. It's like a jet engine's going on, because all of these computers have their fans running full blast just trying to cool them off. So if they're in a cold country like Canada, Sweden, or Iceland, they can literally just open up the windows and let the cold air come in and save on air conditioning. So the good for Hive is it's profitable today, and has been profitable for a while. And that's rare in this industry, because most of these companies, as you're going to see, they're spending so much money on constantly upgrading their gear to the latest ant miners and expanding, buying more warehouses and filling out more computers in them, that they're taking a lot of their what would be earnings and blowing it right out the door. Hive has been more of a, let's treat this like a profitable company. We're going to make a profit, and then we're going to take a percentage of that profit and reinvest it into more miners, more space, more whatever. So they have more of a truly business-minded philosophy, and I like that. It's unbelievable profit margins. It's 80.83 profit margin. Its return on investment is 78%. Its revenue forecast is to grow. They're all going to grow. They all say they're going to grow. But this is good with a profitable company, that they still have enough cash flow left over to continue investing in more miners. So that's good. Holding, oh, and this is the other thing. They're holding Bitcoin and Ethereum because they produce Bitcoin and Ethereum. And of these four, that's the only one that's producing Ethereum. Most of the other companies are just doing Bitcoin, and Ethereum tends to be a smaller niche market. So they hold 320 Bitcoin right now, and in the most recent little media release, and they have 20,030 ETH coin in their inventory. So like most of these companies, if they think the coin's going to go up in value, they will hold back some of their production of coins into their inventory. Instead of selling it and putting cash on their balance sheet, they'll put coin on their balance sheet. Some do a lot of this and some do a lot less. This company is kind of in the middle. You'll see one in the future that just seems to be banking tons of coins. And like I said, it mines ETH and Bitcoin, which is unique. There's big institutional investors in this one. Fidelity is a big investor, and they also have it in their Fidelity over-the-counter fund. Again, like I told you, venture exchange is kind of like the over-the-counter. So an over-the-counter fund is a fund of smaller, more speculative companies. It uses green energy to mine. That's a good thing, and a lot of people don't want to buy crypto coins from a company that's like in China, where they're creating it strictly from coal power. Dirty power like that, people get really turned off by that. So this company's all green with hydroelectric, solar. I can't keep track of who's doing what, but all these four companies, the reason I picked them is they're almost all doing all of this mining with green energy, which is either wind, solar, or hydroelectric. Its past year's return, the stock return in the last year is 1,350%, which I'll show you the graph in a second. And it's recently acquired 10,500 next generation miners, bringing capacity up to 2,474 petahash per second for Bitcoin. And if you look up at the top, the hash rate based on current Bitcoin payout is about 1,000 petahash equals 4,000 Bitcoins a year. So you can kind of judge how much they're going to bring in. They also have 2,715 gigahash is going towards their ETH production. So that's all the good stuff. But of course, let's look at the bad stuff now. So the bad, there's been some insider selling in the last year. Now you can look at that two ways. You can look at it with why would an insider sell if they think this company's going to be growing in gangbusters, and that's a bad thing. But then there's also times where these insiders have bought in with all their life savings back when they started the company, and now they just want to diversify a bit. So they want to sell out because maybe they need to buy a house, or maybe they want to diversify into other stocks. So it's not necessarily that they don't have trust in this company. It just might mean that cash flow wise, they needed to liquidate something and all they own is the stock. So there you go. So don't always look at it as a complete negative. Another negative is it's listed on the venture exchange. The venture exchange is one of those ones that most people don't have access to live data from it. So you're getting a 20-minute delayed feed and you don't have stock options. You know, it's just a kind of a hindrance to be on the venture exchange or like the over-the-counter exchange. But the CEO of this company has said more than once that this year his intention is to get on the full-fledged Toronto Stock Exchange, and he's even got his eyes set on getting a NASDAQ or US listing, because once you do that, you're going to see at the end of this, the US listed companies trade for a much higher PE, so to speak, where they get more exposure in the States, and therefore more people want to buy the stock, and therefore the price per revenue goes up for American companies versus strictly Canadian listed companies, and especially listed on the venture exchange, because most American investors probably don't have easy access to that exchange. Then this, being a smaller, more speculative company, obviously the stock price is volatile, but I could almost say that for every one of these. So that's Hive. Next is Hut8. I just wanted to show you this photo too. Most of these companies have one or two or three big warehouses, and then they have rows and rows and rows and rows of computers. This company does it more like turnkey, like they can build these little trailer things that have those ASIC miners inside, but they can then buy, like they can afford to buy one row of trailers, and then when they get more money, they can start another row. And then so they're not buying a massive warehouse today that they don't have enough money to completely fill with computers. So that's an interesting way to do it. In the long run, I don't know if this is more efficient, because I think this is more about being able to invest a little at a time as opposed to doing it the most efficient way, because I think it would be more efficient to have one big open factory if you can afford to do it that way. But this is the way Hut8 does it. So Hut8 has a market cap of only 800 million. So it's the smallest of these four. It operates in Alberta, Canada. Oh, I should have mentioned that. Yeah, I did mention the other one's in 3 countries. So this one's only in Alberta, Canada. The good. It just started being profitable, so that's good because the other 2 I'm about to mention after this are not profitable yet, but it just started being profitable. So, maybe it was a good quarter or maybe it is on the road to pure profit after this. As you can see, its net profit margin is not nearly as high as Hive at 80% or whatever it was. This is 41.12%. That could be a case of the fact that it's just starting to be profitable, and when it really kicks it into gear, this profit margin will go up. Obviously, you're also seeing the return on investment is 21.4%, which is not nearly as big as Hive, but then again, same thing. It's just newly profitable. Its revenues are forecast to grow. This is the best part about it. It presently holds over 3,000 Bitcoins. For a small market cap miner with the smallest of all the petahash rates, meaning the massive computer power it has right now, it has the most Bitcoins in inventory. So if you want a company that's got a small market cap, a lot of potential for growth, and has a ton of Bitcoin on its balance sheet, which would be good if Bitcoin goes up, this is the company. It's upgrading its miners, but it doesn't have a contract, a hard contract with an ASIC mining company, like some of the ones I'll mention in a second. So it's having some issues with buying new miners because there's this chip shortage. So it's got 38 of these little trailer block centers, and it's doing about 1,073 petahash per second. The bad is its trailing 12-month PE is 81. So that's much higher than Hive's was, again, probably because it's just starting to be profitable. It's got less than a year's worth of cash runway, but as you can see, it's because they're banking almost all the Bitcoin they produce and therefore not selling it where they would then have cash. So I think it's more of a case of they're trying to take every coin they can and put it in an inventory, which therefore lessens how much actual cash, fiat currency they have on their balance sheet. Another bad thing is insiders sold 3.5 million shares in January. Again, you can read into that either a bad thing, they just losing confidence, or they just needed to diversify into other holdings. Shareholder dilution through stock issuance and warrants in the past. That's, I guess, if you're not selling the coins, you might have to issue stock in order to fund yourself. So it's maybe kind of expected. It's petahash to milliwatt. Anyways, its rate is low, less than 20, which is less than some of the ones you're going to see in a second. So it kind of implies that maybe their miners aren't the most efficient ones on the market and that they should really be upgrading them. And even though they are trying to, I think that chip shortage is slowing their progress towards getting faster, more efficient miners. Its stock price is volatile and there's no stock options. This one's listed on the regular Toronto Stock Exchange, but they don't have any options for this company. It's just not liquid enough to justify having options on. So yeah. Next is Marathon Digital. It's one of the American ones. It's listed on NASDAQ. Its ticker is MARA. It's got a larger market cap of 3.5 billion. It operates only in Canada, in Quebec. It's got huge earning growth expected, but it's forecasted for 3 years down the road. And I'd rather have a bird in the hand than 2 in the bush, so to speak. And that's why Hive, that's already profitable, and Hut8, that's already profitable, have a little bit more, comfort that there's definitely profit there because they're already profitable, as opposed to a company that says, we're growing gangbusters, but we're not going to actually be profitable for 3 years. It uses green energy to mine, which is good. It's got a Bitmain partnership. So that's the biggest ant miner or ASIC miner producer in the world. So they've got a contract with them that gives them priority access to the latest ASIC miners. That's huge because most of these other mining companies are begging to get more of these in, and of course they're having slowdowns. So they have a new facility they're producing that's going to take, with a combination of the Bitmain partnership and this new facility, they're going to go up in production by 12 times, up to 55 to 60 Bitcoins per day, costing them only an average of $4,541, which, as you see from the top, the average in the industry is 8,206. So when they get all these Bitcoins produced, they're going to be very, very profitable. But again, they've been spending a lot of money for all this production growth, and therefore they aren't going to be profitable in the near future. Their petahash to milliwatt rate is excellent at 29, the second highest of the 4. Its present petahash is 1,036 per second, but it's expanding it to 3,320. So you can see there's definitely growth coming. Stock options are available on this one. I personally have written puts on this. So yeah, that was a good thing about it. I like dealing with puts and calls. And this one, I was able to do that. And the last two, I wasn't. The bad. It's not profitable for 3 years. There was significant insider selling, not too distant past. Significant shareholder dilution, which means they at one point started issuing more shares. And most of the they have at one point they had quite a few Bitcoin in inventory, but it was found out that they actually bought a lot of them because they felt that the price of Bitcoin when they bought them, I think it was around $30,000. They thought it was much higher, should be much higher, so they bought a bunch of Bitcoin on the open market, which was smart because now it's $55,000. So they made a lot of money on that. And of course, the stock is volatile, but you can say that about all of them. Okay, the last one is Riot. So Riot's ticker listing is Riot on the NASDAQ. It operates, it's the only one that of these that operates in the United States. It operates in Oklahoma. So it's already been producing more. It's got 75 more Bitcoins mined this year than last year. It holds 830 Bitcoins. It uses green energy to mine. In the past year, its equity has returned 4,100%. It has the lowest cost of kilowatt per kilowatt hour of all the four at only 1.5 cents. Its petahash to milliwatt is excellent at over 31, which means they've got very efficient mining going on. Its petahash rate is 1600, but is going to move to 3800 by the end of 2021, and they're building up to 7700 by the end of 2022. So as you can see, massive production, but just like the last one, massive production usually means no profits for this year. Vanguard and BlackRock are investors, which is they're big, and that's always helpful. They obviously feel that there's a lot of profit in the future. And stock options are available on Riot because it is a NASDAQ listed company. So the bad is it won't be profitable for 3 years. Again, less than a 1 year cash runway. Its earnings growth, even though there's no earnings per se, but its growth towards earnings has slowed lately. And that could be because they're spending a lot of money trying to increase their production. 250,000 shares were sold by insiders in the last 6 months. You see a bit of a theme here. Shareholders have been diluted because of share issuance. And they do not tout how many Bitcoins they have on their balance sheet. Like when you go into their website, usually like the one that had 3,000 plus Bitcoins on their balance sheet, they were like, woo, look how much Bitcoin we have. This one was more like, didn't mention it anywhere. So that could be a case of because they sometimes put them in inventory, and then when they think the price is pretty high, they dump them out onto the market, and then they put them in. So I read one day that they have 800 in their inventory, and the next time I hear they have 40, and the next time so it's sort of hard to know with some of these companies how much Bitcoin they actually have on their inventory. And the stock is highly volatile, which they all know. So let's talk production head to head in Bitcoin production. Now here are the four companies. This is their petahash rate, at least right now. Like we talked about, a lot of them have big plans for the end of 2021, 2022, but this is what they're doing approximately as far as I can tell right now. So this would be the amount of Bitcoin they produce in a year based on that petahash rate. Based on a $55,000 Bitcoin, this is the revenue they would bring in. Now you got to factor, you got to apples to apples here, right? So how much is this compared to their market cap? So this revenue to their market cap, Hive has a 0.37, so 37% of the market cap is this year's revenue. Hut8 Mining is at 29.5%. Marathon Digital is only 7%. That looks really bad until you factor in their production growth by the end of 2022 would bring it to 89%. So yeah, not doing too well right this minute, but forecast to do quite well in the future. And the Riot Blockchain is at 24%. So I'm going to rank them now in order of my top four from best to, I guess, not worst, because they're all four are good. That's why I put them on this list. But the ones that I feel the strongest about to the one I feel the least strong about. All right, my number one is Hive Blockchain. Now, I already own this company as full disclosure. I already bought this stock. Most important reason for me is that this company is profitable. And not just this quarter been profitable for a while. They also have been investing in growth and more ant miners and whatnot. So it's not like they're just a cash cow where they're just mining Bitcoin and then cashing out and then buying, not improving their production for the future. They are doing both. And They're the only one that does Ethereum. And I think what Ethereum right now has been kind of lagging a bit because the gas fees on Ethereum are so high that a lot of other companies like Binance and other companies are starting to try and eat away at Ethereum's lead. But when Ethereum 2.0 comes out, it should significantly lessen those gas fees because the congestion will mostly go away. So then I think Ethereum will really take off and start to increase in value. And the only one of these 4 miners that does Ethereum is Hive. And it plans to list on the bigger exchanges, which will massively increase their value because of their exposure. All right, my number 2 one is Hut8 Mining. I do not own this company yet, but I do have a limit order at just over $6, which I'll show you on the graphs at the end of this, that I came real close to getting that one today, and I have every intention of getting it. I thought it was going to hit my limit order, but it didn't quite get there. Just missed it by that much. So, full disclosure, I have every interest in getting into this company as well. It is banking the vast majority of its production. So they're over 3,000 Bitcoins and counting. So I think last I saw it was like 3,040 or 50, but I mean, I'm sure every day they're adding more to that. I'm sure they must have to get rid of some, like sell off some just to keep the lights on, but they're banking as much as they can. It has recently become profitable, and that's a good thing, makes me comfortable. I don't like hearing companies that are supposedly increasing production, but then they go, we aren't going to be profitable for 3 or 4 years. It makes me uncomfortable. I mean, what happens if Bitcoin has a massive pullback? Now, are they going to be profitable 6 years from now instead of 3? I mean, I'd rather have a company that knows how to be profitable now. It has plans for expansion, and it has a low cost of mining. It has the lowest market cap, therefore there's more room for upside growth here. If a company like, picture Apple, a huge company, it's kind of hard to move the needle. Even if Apple comes out with a great new product, it's such a huge company that it doesn't make a massive difference to the bottom line or the revenue. When it's a smaller company, it does. All right, my number 3 is Marathon Digital. Now, as you can tell, it ended up being exactly in alphabetical order. It wasn't intended to be that way, but this is just the way it worked out. So this one, I don't own it officially, but I do kind of. I wrote a put, so I sold a put at the $35 May expiry. I sold that for just over $5, and it was just above 35. So if I get exercised, my average cost will be just over $30. And when I show you the graphs in a second, you're going to see that I feel that's an amazingly good entry point. So I hope that in the not too distant future, I think today with the pullback, it's actually below $35. When I sold it, it was around 36. So I had a little wiggle room to get above 35, but I kind of want to be exercised on this put because I want to get into the company. If the thing turns around now and goes to 45 by the end of May or the third week in May, I won't have the stock. I'll just get to keep the premium from selling the put. Okay, this is the one with the Bitmain partnership, which is huge because every other miner is crying that they can't get new mining gear, even though they have the money set aside to buy them. So the fact that they have this Bitmain partnership and they have priority, that's huge. It has the second lowest electricity cost, which is their kind of cost to operate. And they have plans to expand production by 12 times by the end of 2022. That's huge. So there's great growth potential. This would probably be my number 1 pick if it was profitable today. If they had a little bit more of the Hive mentality, which is like, let's take some of our money and aim towards being profitable and limit the growth. Like instead of 12 times growth, why not make it 7 times growth and put more of their money towards, paying off debt or whatever they got to do to make themselves profitable. If it was profitable today, this would be my number 1 company. And of course, the last but not least, this is not a bad company, is Riot Blockchain. I do not own this company. I do not even have intentions to buy this company because when I have the other 3 when I have all that I want of the other 3 companies, I think I'll be as fully invested as I want to be in the miners. So this one's kind of becoming the always the bridesmaid, never the bride. Didn't quite make it to the altar yet, but some other people might think differently, and this is definitely a decent option. It's got good growth for the future at over 75 production growth by the end of 2022. It has the lowest electricity costs at 1.5 cents, and that's huge. So they have this contract They do a lot of wind energy and stuff, and they've got this contract for 1.5 cents per kilowatt. This might be why they're in Oklahoma, because there's probably not a lot of other miners in Oklahoma that are sucking up the energy, so therefore they can get these great contracts. That's probably why they're there instead of a cold country like Canada. It's very efficient mining with the pH over MW of over 31. It's the highest of the four. So that just means that they're being very efficient with their power use. A lot of institutional investors, and it's part of a bunch of ETFs. Again, this is that part about being listed on the NASDAQ and being one of the bigger market cap companies at least of these four. I think it is the biggest, and therefore it gets a lot of exposure. Whenever a big company decides they want to get into crypto mining company, Riot is probably at the top of their list just based on their size, because these bigger institutional investors can get in and get out without affecting the price too much. It has the highest market cap, so it's the least volatile of these four stocks in terms of price movement, but it also, being large, it's hard to move the needle. Like we already talked about with Apple, it's kind of hard to move the needle if you're so big. Not that this company doesn't have a lot of room for growth, and it will, but it won't grow as quickly as Hive or Hut8. All right, I want to look at the chart one more time for Bitcoin, just to remind you, a little quick reminder that Bitcoin has just been on a tear, right? So these miners should be making scads of money, right? Then there's this tiny little pullback at the end here of Bitcoin in the last, couple of days, 2-3 days. And then when you look at the stocks of these miners, you're going to go, wow, they got savagely beaten. So it might be a great time to get in. Let's check it out. So this is the chart this is an hourly chart. Each candle is 1 hour. This is the hourly chart for Hive, my favorite stock. Like I said, I already own this one. I bought back here. I bought right down, at one point I bought 350 something. So I bought back here around 350 for my first tranche, 375, and then I got some just over $4. So my average price is around 385, I think. And I was doing quite well because, as you see, it went all the way up to like 530. And I was quite profitable, quite happy, expecting, Bitcoin's on a bull market, and it's going to go. And like I said, in the last few days, let's say these last 3 days, Bitcoin kind of rolled over a bit. Nothing to be too concerned about, but boy, they pulled back to below my average cost. But if you think about it, this is great. For anybody who doesn't have their money in it yet, this is like a second chance. This low is higher than this low, which is good. This MACD is just about to go positive, as you can see from these. Oh, I'm in the way. There we go. I get my head out of the way. This MACD is just turning positive, or just about to turn positive. The RSI was at 20, which is oversold, and now it's starting to round back up. So if it can get above these, I think this is 9-period moving average, then your kind of momentum's back on your side. So you can feel a little bit better about getting in now. And even if it did roll over and do one more little pullback, you got some support right here around almost 340. So that's Hive. Let's check out the next graph. Okay, so this is Hut8. This is my second favorite one, and it's almost identical situation. The pullback, the MACD. This one's not as close to going positive, so you might want to wait just a little bit longer on this one. But the same thing, it was below 20 on the RSI, now rounding back up, showing momentum as it went from oversold towards a more momentum upward direction, and that's good. So you don't have the most obvious support here. If I go back a bit, you can see there was some support way back here, but nothing recently. So I'm thinking you got to work based on the MACD crossover and the RSI moving up, and that's your momentum indicator. And then I think you probably are good for a while. I mean, if I throw a trend line on here, you've got probably up to $9.50 before you're going to have this downward sloping trend line kind of give you a little bit of resistance. So that's Hut8. All right, here is my third favorite, Mara. Now I'm going to be mindful this time to take my head out of the way so you can see the MACD and all that. So there you go. As you can see, this one's a severe pullback. Check this out. I mean, that's a long way down. It was up at like $54 just 4 days ago, and now it got down to as low as $33. I don't have any stocks in this, but I did sell some 35 puts. So I've got naked puts that I sold at $35 for May, the third week in May, but it gave me almost $5. So I would get in then at around 30. If those stocks got issued to me, I would have an average about just over $30, which is great because you can see these three support lines of previous support. So we should have a hard time getting through all of these. So I feel very good about getting in at $30. As you can see, the MACD just about to go positive, maybe tomorrow. The RSI went from oversold up. These all sound like the same chart over and over again, but that's just the way it is. They're all in the same industry. And last but not least, let's look at Riot. So here's Riot. This one's beautiful, like nice support line here. I don't own Riot and I don't have any plans to own Riot. It's just my fourth favorite. But same sort of thing, MACD, give it maybe tomorrow if we get a bit of a move up. This should break positively. RSI was at 20, which is oversold, moving up. You got support right here from this previous low. Well, this low was just a little bit under this one, but this was pretty close. It's above that. You could say that it broke it, but then went back through. And as long as by the end of the day you're above the support, you're good. You're good to go. It's usually the close of the day that matters, not intraday, because you will get some intraday spikes that will go through a line of support. But yeah, you didn't finish the end of the day below it, so that's good. So there you go. Those are my 4 favorite in order: Hive, Hut, Mara, and Riot. If you're interested in getting into that cryptocurrency era, if you think Bitcoin and Ethereum and the other cryptocurrencies all have a bright future ahead of them, then the best way, the most, simple way to get into it is buying stocks in these kind of companies that are a leverage play on cryptocurrencies. So there you go. Hopefully you enjoyed this, found it maybe not entertaining, but informative. If so, show the channel some love by giving a thumbs up. And please, please, please subscribe, because we got to get over 1,000 subscribers for YouTube to start helping me push these videos out to more people. If we get to 1,000, what I'll do is I'll do a live episode where I'll trade during trading hours live, and I'll post it ahead of time so you know that it's coming up. You can jump on and you can ask me any questions on the live feed. Also, one good benefit of having a brand new channel that's doing this sort of thing is I obviously have plenty of time to read all the comments. Any questions you have, put them in the comments. If you also want to write to me kind of more privately in a more detailed way for whatever reason, I've created a new email address for this YouTube channel called Investing with Craig, the same name as the channel, at gmail.com. I'll put that in the description below. And again, if you want to check out my sailing channel, which has 34,000 subscribers, and that's my eventual plan for this channel, is to get to 34,000 and above. I have plenty of time to do these right now, just out of curiosity, because I live in Ontario, Canada, and we have had so many cases of COVID lately that they've put us on a hard lockdown. So other than essential service people, nobody's leaving their home. Most things are closed except for grocery stores. Literally, it's worse than it was at the beginning of the pandemic. So yeah, my boat is not getting any closer to being launched. I haven't even taken the winter cover off yet. So I've got all this free time to make videos about investing in cryptocurrencies. So in case you're wondering how I've all this time to produce these, I don't have anything else going on, no boat work. Anyways, that's the reason. Hopefully you enjoy this channel. I enjoy doing this content and it's a win-win. So write some comments down below if you have any questions, and I will talk to you next time. Ciao for now.